Hi everyone, in this lesson I'll cover the breakout of previous support and resistance as another criterion that you should take into account when qualifying supply and demand zones. So when you identify a supply or a demand zone, look left and see if the previous level was broken. Look at this example. This is the Euro-US dollar 1 hour chart. The previous resistance level is this one. As you can see, this level was strongly broken by the market. This breakout indicates that this strong move is made by a bank or a financial institution. Because when banks enter the market, they risk millions of dollars. So the market goes crazy and doesn't care about support or resistance. Look at what happened when this level was broken. The market went strongly up, because traders who sold the market here, they placed their stop loss just above this level. So when the market hit their stop loss, the bank took their orders and pushed the market higher. Look at another example. This is the Euro-British pound 4 hour chart. This is a clear supply zone. Look left. Here is a support level that was strongly broken by the market. This indicates that this move was made by a bank or a financial institution, and this confirms the strength of the move as well. Let me give you another example. This is the US dollar Canadian dollar 4 hour chart. As you can see, this is a clear supply zone, and this is the previous support level. As you see, it was obviously broken, which confirms the power of the zone. But as you know, the breakout of a previous support or resistance level doesn't mean that the zone is strong or it is worth trading. So let me remind you of the other factors that you should take into consideration when qualifying a quality supply zone. The first criterion is the strength of the move. To qualify the quality of a move, we look for two important things: the time spent in the zone and the candle size of the move. As you can see, the market didn't spend a long time in the zone, and the candle size of the move is big. So we can see that the move is quick and strong. The second criterion is the freshness of the zone. This is a fresh zone because it has not yet been tested. So when the market retraced back to test it, you should prepare yourself to short the market. The last criterion is the breakout of previous support or resistance. And as you can see in this example, the previous support was strongly broken, that we should take into account. So right now, we can see that this supply zone is a high probability level that we should take into account. But this is not quite enough, because we need to make sure that the zone offers a good risk to reward ratio. And that's what we are going to cover in the next lesson.